Ladies and gentlemen of the crypto space, we're live on a Friday, March 18th at 11:40 a.m. This is when retail exits markets. They don't have a capacity to navigate these markets. These markets will drive you absolutely nuts, but there is logic and reason that can be applied. There is the notion of portfolio balance, and you don't always have to completely understand geopolitics and monetary policy to navigate the markets. At least if you understand portfolio balance and position sizing, you can take positions and do things at least rationally. And I'm starting out the stream like this because I see the retreat. I see the exit, and it's rage quit. It's people have lost money. We all have lost money, but if you enter the market and you're down 65%, but you entered at the top, your portfolio got absolutely destroyed. So this is where like time in the market beats timing the market, but timing the market can't be marginalized. It's absolutely critical. It took like 13 years for the S&P to recover from Nasdaq to recover from .com in 2000 because you didn't time that. That was absolutely brutal. It's just a combination of all these components that really offers an optimal capacity to navigate these markets. And there's some crazy stuff going on. And the title of the stream is BS is being called everywhere. It's being called everywhere. It's being called by countries. The sanctions are being tested. What is money is being questioned more and more, especially with the existence of the crypto space and its current uh, degree of development, and it's evolved so much. Look at all the U.S. politicians that are aligning with cryptocurrencies, and it, it's just downright fascinating. Um, one of the biggest things on my mind is China and the relationship with the U.S. It's a symbiotic relationship in so many regards. We export dollars to them. We import goods and service, well, mostly goods. Our supply chain is completely exported to China. So they hold so many cards in so many regards, and they've aligned a bit with Russia, and Russia is just an absolute catastrophe right now. With such a humanitarian crisis going on there, and obviously it's degrees worse in Ukraine, and that's just tragic in so many regards. Just everyone's calling bullshit. And in some regards, I see Russia uh, doing what they're doing in Ukraine is not really a military thing, but it's not. I don't think they're expansionist necessarily, but it's just such financial pressure that the U.S. places on the entire world that they snapped. They snapped. They're like, we're done. They've been planning and preparing their sovereign reserves for all these years, getting rid of sovereign debt and favoring hard assets, in their instance, gold, for years. Everyone's just pissed because the U.S. pulls all the strings. And look, they literally did exactly what everyone expected them to do with the sanctions and the whole SWIFT thing, which will take months to roll out, and they're just pulling all the financial levers, and that's just exactly why everyone has such animosity for the US dollar. And that's really where cryptocurrencies come in, and just not dollars, not US debt. Because the last 41 years, that's been the story. And obviously, gold is historic in that regard as a reserve asset. But look at what's going on with the CBDC developments around the world and the cryptocurrency developments, which is around the world, but it's the general public infrastructure. It's just not dollars, and that's just such a resonating theme in my mind for how things may play out in the coming years. Let's pop it over to the main screen. We'll check out some charts. We'll get a sense on what the market's doing, but I'll also give a sense of how I'm approaching the markets and choices that I'm making, my logic and rationale. Dan's in the house. Good morning. Well, why is Thor getting more crypto Twitter hype than Ren? Unknown. Hype doesn't mean much. What's pertinent is if you're interested in that tech, is balance. Meaning, if you're interested in, is that really the best cross chain tech? It's not a zero sum game, and clearly we have a lot of cross chain tech. You got multi chain, and now Stargate just launched, which is a real big deal. Stargate is not. So Stargate reminds me of Ren. Ren is not just cross-chain interoperability. It's a decentralized, well, to be decentralized network of computers, and that's powerful. It offers great power to software that can be deployed on them. So it's distributed compute in many regards they could offer. But Stargate reminds me of Ren because it's not just cross-chain tech. It's cross-chain messaging. Holy crap, that's a whole nother level. And you can't do that with any of the other cross-chain bridges. Multi-chain doesn't, can't do anything like that. So Stargate offers something novel that is much larger scale and scope as compared to other cross-chain bridges. It's not just a cross-chain bridge. If you could do cross-chain messaging, you could do cross-chain bridging. So Stargate offers that kind of functionality. I mean, oof, look at Ethereum go. So the Ethereum narrative is quite interesting because it's going to have a 90% emissions reduction after the merge, and that's like right around the corner. There was large outflows from exchanges over the last couple of days, and I think Ethereum's narrative is stronger than ever. And my mind goes back and forth between a good part of the portfolio being Bitcoin or Ethereum because they hit completely different narratives. You have the monetary policy of Bitcoin, which is disinflation. There's an increase in supply on a daily basis. Um, so it's inflationary on the short term. Technically, so is Ren, but it's hyper disinflationary. It's been what, like a 70% reduction in emissions because of the burn component, and then another 90% with the merge. It's going to become full on deflationary, where there's less supply on a daily basis, and that changes everything. You guys know the deal with the deflationary monetary policy. It's an absolutely critical component. Deflationary monetary policy unto itself, especially with a relatively newly created protocol, is not enough because different dynamics and forces are at play depending on the age of an asset. But Ethereum is different. It's older and it has a different narrative. It doesn't follow the same rules and doesn't have the same pressures on it as a newly created asset. So it having deflationary pressures is quite extraordinary. It has history and scale and scope that's more comparable to Bitcoin than, let's say, a new DeFi protocol that launches with deflationary pressures. I mean, look at Curve. Curve is pretty much neutral with regard to emissions. It's like 99 and change percent of emissions for the last months have been removed from supply by convex. So it's not enough for it to be not extremely disinflationary and transitory deflationary. There's other factors that go into it, and obviously, Ethereum has a larger scale and scope narrative more aligned with Bitcoin, whereas Curve could evolve into that. It's not quite there yet, but let's take a look at the Curve chart. You know what happens when we pull out on the monthly chart on Curve. Same thing I've always said applies. Let's take a look real quick at the monthly, and I want to zoom in on the 4 hour. I'll show you guys what I'm seeing. So, I mean, it looks wonderful on the monthly. Higher lows, same price action support and resistance lines. I love that we're above this bottom green line. That is a ridiculous line to be above. We're in the purple box on the monthly. On the weekly, notice the falling wedge. We're still below the guppies on the weekly, so there is resistance above head. It's pushing into the guppies. A breakout above, out of the falling wedge would be interesting. There's no reason not to discount the potential for another trend hit on the bottom of the wedge. And what's most important in this market conditions is you could have capitulation events, liquidity crises. And when you have that, anything is sold because any type of liquidity that can be acquired to service debt obligations, it's going to be sold. So that's why $1 is still in the cards in a capitulation event. Otherwise, another support hit. You usually have about 3 support hits, 3 drives down in triangles and wedges for the most part, and there's about 2. So it could break out. Yeah, premature breakouts, and that'll be nice to see. I mean, it's right on the line if you guys notice, only the 4 hour. Let's zoom in a bit. And that is a decently drawn trend line. So it's hitting resistance on trend as well as the 100 SMA. We could easily see a breakout. That'll be nice. So overall, What have I done with the portfolio? Let's give a 2 year time horizon. You know, multiples were achieved between 2020 and end of 2021. Down about 65% since all-time high, which is fine because I tell you guys to measure from the bottom. From the bottom, it's about 4,000% appreciation in 2 years. When you experience the depreciation from the top of irrational exuberance, what's most important mentally is to reset. You have to reset your equilibrium or your point of reference. You always have to play your hand. You can't play the hand you had, you have to play the hand you have. So you could, subjectively assess and apply judgment to the hand you have, how well you did relative to the bottom, how much you could have protected from the top. Yeah, but that's all 2020 hindsight. So what's most important is moving forward and really being able to deal with the emotions of a capital loss, putting it into perspective, and always playing the damn hand you have. The goal is the same whether you made money or lost money. You want to protect your capital and grow your portfolio. So you can't dwell on what you could have protected. You can't dwell on, damn, if I doubled down on Ethereum. No, because that's not the appropriate thing to do. What's most important moving forward is following the rules. Follow the rules of your portfolio that has gotten you to where you are, and the portfolio will keep achieving similar performance. That's the bottom line. The goal of the portfolio isn't to make money. That's one of the most important things. I probably said that a couple times on the stream. The goal of your damn portfolio, boys and girls, isn't to make money. The goal of the portfolio needs to be to follow the rules. If you follow the rules, the portfolio will perform for you. Respect the portfolio, and the portfolio will respect you. Who else is here? We got Killis in the house. Dark and Goose. Dark and our Goose. My man. Good morning. Brian, haven't caught alive in a while. Hope I'm doing well. Yeah, it's pretty good. I got some work to do today, but I'm very much looking forward to the weekend. I get this when I try and connect to Stargate Finance based on either your wallet address or your IP. You're not eligible. Yeah, you got to use Britain mode. This is a global world, and you're able to operate in any country you choose. That's the way VPNs work. I call it Britain mode. They're doing it to cover their backs. From a consumer perspective, that's trivial. They're doing it from a provider perspective. So VPN services are a must in this day and age. Andrew, morning capping everybody. 38 people in the stream, 8 likes. We can do a little bit better. So heading into the week, I think I had about 55% stablecoin exposure. Of that, I took 25% and I applied it to an Ethereum position. I was overexposed to stablecoins, in my opinion. Now, obviously, 55% exposure, you could have a capitulation event at any time. You could have a liquidity crisis. And that's exactly what happened in 2020. And then you get extreme discounts. But having overexposure to stables, my mind thinks it was a bit greedy. Oh, I want to buy, a huge amount of capital worth of very depreciated Ethereum at like $1,500. And that's greedy. That's pushing it too much. So you never know the way a market's going to head. It doesn't matter what anyone thinks, and anyone that says the word bullish or bearish on Twitter, I don't like that. I don't like using those words anymore. I may have used them historically. But you can have the most bearish chart, but all of a sudden some sort of macro event happens and it rips bullish to the upside and you get a directionality shift. So what that means is you have to have a healthy portfolio structure. Um, a bearish market, you need a hedge. You need to be in the market to hedge the bearish market. That's really what like 60-40 portfolios historically where stocks were 60% and bonds were 40%. Now, that's completely not useful nowadays, but the notion of portfolio balancing is always useful and always will be useful. So even in a bearish market, exposure to potential bullish price action is meaningful to account for directionality shift as a hedge. So I took 25% of stables, deployed it to Ethereum. Now, historically, I've talked about the notion of everything in the portfolio should be working, and I'd like to broaden perspective. What we've developed over the last 2 years are strategies, methodologies, ideologies. So there's various ways to interact with the market. There's notion of capital gains, holding assets, having collateral assets, such that you could access equity and achieve a degree of leverage, and you could risk manage the leverage where you're borrowing stables and you're deploying the stables for yield. Great, great groovy grant. There's ways. That's what we did on Matic. If you recall, we had a lot of fun playing that game. And then there's the whole pizza shop narrative where you're generating revenue, and that's still in play. I mean, I'm pretty sure a good portion of you folks have convex and maybe old school V curve positions or CVX CRV positions. So that narrative's still in play. So what is higher in priority with regard to those narratives? Position size and optionality. So the stable position, you always need stables because you need to be able to buy something if an opportunity arises. So yield from the pizza shop should really go to stables. That's just the bottom line. If you're trying to outperform the market, yeah, I guess you can compound into the yield generating position, but you really should always have a stables position. Uh, Look, Stargate just launched. Probably want a piece of that. Look, Citadel's launching next month. Probably want a piece of that. So, as much as it could be the most screaming bullish market, and Ethereum's ripping 10x on the money on a daily basis, still need a damn stables position. Because if you're all in a position, you have no hedge, you have no optionality, you can't make any choices. If you can't make any choices, you've taken away your freedom. You need a capacity to make choices. Nice looking top pattern right here. It's good to see. Look, inverse head and shoulders right at the top, baby. 2,900. Look at that. This thing's gonna rip to 3,000. That's good to see. Nice position in Ethereum I took. It's not the whole stable stack. I need a lot of stables. The market is still ridiculously bearish. You got capitulation events screaming everywhere. All China has to do is flip the switch and turn off our supply chain. And what the hell do you think happens to the United States economy, and frankly, the global economy for that matter? But the thing that's always in my mind is that these countries are pissed, man. They got a lot of animosity. And I mean, that's exactly why Russia did what they did. They're pissed. It's past the tipping point. It's fourth turning type stuff. So optionality is critical. Um, you got to kill us. Always a pleasure. Darken, what do you think about M Smell? Very interesting. I still like Abracadabra very much. CDP protocols are critical components of the crypto space. They have Eurodollar characteristics. Um, it's extremely volatile, has a poor history with regard to the narrative, which was disrupted. Um, I have, I still have a position in Abracadabra, still up like 5x. I have no idea how. Um, so I wouldn't have it as a meaningful component of a portfolio. Much more aligned with, 1% type position, of which I believe it currently is 1%. So I've been liquidating my stream. I bought from an OTC deal. So I've been trimming the position to an appropriate position size, considering its place in the market. Currently sitting at 1.5%. So that's how you size a position, and that's okay. And the position size must be respective of your overall portfolio size. And that's the only way you play it rationally. You're like, oh my God, this altcoin is going to rip 100x on the money, and you plow 100% of your portfolio into it, you're going to get destroyed possibly. More often than not, doing things like that is portfolio destructive. Every once in a while, you have some random guy that turns 100 grand into like 20 mil, and that doesn't happen. It doesn't, and it takes a fair amount of brilliance and luck when it does. And then I've only known a couple of people that have done things like that, and I think they have both. I think they have a great degree of brilliance and luck. But don't bet on that, boys and girls. I don't. I don't. I don't even bet on that. I will not outperform the market compared to many persons. I'm not going to get 1,000x on the portfolio. It's not going to happen because I'm too protective. I'm too risk considerate. Um, I'm going to achieve rational gains. A couple of multiples on the portfolio, I'm going to be very happy. 2, 3, 4, 5x, 10x on the portfolio. I don't know. I mean, I don't expect the past to repeat itself. Between 2020 and now, is 40x on the portfolio, and I was conservative. And I was the risk considerate guy. Holy crap! You can imagine these boys that really took gambles and few and far between really outperformed. Um, I would well, at the top, all-time high was a 100x on the portfolio between 2020 and 2022, end of 2021. That's crazy. Was an interesting experience being at all-time high, and doesn't bother me one bit. I made the right choices. The only thing I can think of in hindsight is that I probably could have protected the capital a little bit more. Obviously, if anyone who protected capital starting in November, December of 2021 did well, and they really protected the capital. And I was late, and I often say I'm never late and never early, and that's okay. I follow my rules, and if I continue to follow these rules, overall the portfolio will head in the direction I want it to head, and we'll do better next time. That's how you do it. Young Kang, what are the safer protocols to park stables? Well, Aave is always good. A curve is always good. I think a lot of the old Bancor, if you could actually find room in their pools, Bancor V3 is one heck of a narrative. I'm very much looking forward to Bancor V3. Can't wait to throw stable coins in that bad boy. Balance is still cool. Um, I don't really like Uniswap. That's just annoying. I don't know why it's still the most popular, but it is, and it has a mode and so on and so forth. But that's besides the point. Sifu has his own token now. Yeah, that's just funny as all hell. Just curious, how do you have time to do so much? Great stream, macro analysis, trading, investing, dev work, advising, and consulting. And I have a job. I'm going to get off this call and I'm going to do some work. I got plenty of work. This call, I said, this stream, and I have work to do. I'm going to get on some calls. I have 1:30 at 2 o'clock. I have a 3:30, and I have some source control that I need to clean up a little bit and get some PRs out the door. I don't have time. I wish I had more time. I wish I had more time to code some contracts, and maybe one day I will, because I got some good ideas. Got the stablecoin narrative, boys and girls. I got my stablecoin idea. I think that'd be a heck of a protocol. 48 people in the stream, 16 likes. We can do a little bit better. Otherwise, I like the way the market looks. I'm comfortable with the position size I took in Ethereum. A little outside of what I've done over the last year, focusing more on Pizza Shop. But we know that Ethereum is a collateral asset. You can extract equity from it, and you can put that equity to work. So it's not stagnant equity. And in fact, there's a lot less stagnant equity in the space, especially with Flare coming online and Qidao partnering with Celsius. I think there's going to be a lot of equity access opportunities in the coming years, and there's going to be a lot less stagnant equity, which is going to release a lot of liquidity into the overall crypto space, which is quite interesting to see. L2s are going to become seamless. Seamless cross-chain interop was the narrative I talked of in December of 2021. And man, with Stargate launch, seamless cross-chain interop. Listen, with Stargate, you can do a transaction on Ethereum, have it execute on Phantom, and get your assets on Ethereum. Holy crap! So let's say that's cross-chain DEX functionality right there. Now, there's other protocols that can do it, but can't quite do it the same way as Stargate with this cross-chain messaging system. Very, very interesting tech. So I took a piece. I took a piece of the bond, and I have another piece of allocation that's coming. And not large positions, small rational percents of the portfolio. So always be considerate. Market conditions are screaming bearish. Um, that's just what it is. So what's the bullshit? Let me end on this note. What was the bullshit that the market is calling? So the short end of the bond yield curve is the yields are ripping to the upside, which means bonds are selling. Um, Then they raise the Fed funds rate 0.25%, which is basically zero. But the whole point of raising the Fed funds rate is to affect markets and decrease velocity, but there is no velocity. That's another story. Some macroeconomic properties are completely distorted, but they want to decelerate the economy, and bonds are selling. If you're decelerating an economy and it's slowing, there's a flight to safety, and that's really where the short end of the curve is going to be seen. So the long end of the curve is much more affected by just the market, the general public, countries, corporations, banks, so on and so forth. But the short end is it's really banks because they use that as their collateral assets to balance the books. So when what's interesting is we've been seeing the short end of the curve yields go up, which means the bonds are selling. So that's a contradiction. The short end of the curve is calling bullshit on the Fed fund rate hikes. So basically, you see the general market. It's not really the crypto space, maybe Bitcoin and Ethereum, and good in some parts of Ethereum mainnet, not the L2s. Um, but risk is on, and in some parts of the equities markets, that's the case as well. But the bond markets really peer through the madness. It's a great source of truth. And overall, the markets thus far are calling bullshit on the Fed rate hikes, and they're basically pricing in the Fed having to cut rates and do like stimulus and transfer payments and QE. That's crazy. So it's really like a showdown what's going on. The markets are calling bullshit on the Fed, and we'll see who's right. The adage always goes, don't fight the Fed, but there's also the notion of the Fed put. So it's like, is the Fed put canceled? Don't fight the Fed. The Fed wants a recession. The Fed wants to fight inflation. Politics can't survive, a recession. There'll be a complete rollover of the entire class of Congress, or the current seating members. It'll be an absolute political catastrophe. So it's literally like the crossroads. We're at the crossroads of so many things: of politics, macro financials, of geopolitics, not just domestic politics, international trade, repatriation of supply chain. Everything's changing. Deglobalization. It's just literally this is fourth turning type shit. It's really crazy. It's like a whole systemic reboot. Absolutely crazy. Last couple of comments. I'm going to wrap it up. Young Kang, my man. Andrew, Cap, have you checked out the algorithmic stablecoin being built by Cody for Cardano blockchain? Yeah, until there's bridges and there's capital flow across chain, I'm not really that interested at all in what's going on over there. You need capital flow, you need liquidity flow, and if there isn't, it doesn't mean much at all if it's an ecosystem unto itself. Um, any thoughts on Amir Taki and DarkFi narrative? Given current views, I'm not familiar with what his work. What's the best way to acquire Stargate? It sold out quickly yesterday. You could buy bonds. Go over here, get bonds. So the bonds obviously have appreciated. These were going. They launched at 50 cents, and now they're at 94, and that's just the way it's going to be. Let's check out the curve pool, STG. So if you go over to curve, so there's a curve Ethereum pool. Let's see. Oh my God. Come on, curve. Give me a break. Mainnet pool. Oh, I guess it's not visible yet. They didn't modify the curve portal. I don't know where it is. Okay, so there's a curve pool for STG. You may be able to get a better price, maybe 70, 80 cents, but the bonds you could get from there. Yes, I'm familiar with Deuce. Deuce is cool. No interest in a position. I I like Laffa. I think they have a great white paper out. Um, I have a good opinion of what they're doing, and they had a security incident. I mean, come on, are we all surprised that what matters is how you come back from a security incident, not that a security incident occurred. So I'm not worried about that. I just have no interest in a position, and that's okay. Do you think Stargate will outperform the market? No, I'm not bullish on the price action of the token. I'm bullish on the technology and the functionality it provides. How the price action of the token will play out, I have no idea. Quantified, late to the stream cap, hope all is well with the family following emergency trip. Yeah, back in action, wife's out of the hospital, everything's good. I'm swamped as always, too much work. Wife's happy, my daughters are happy, therefore I'm happy. That's all that matters. If the family is good, I'm good. Killis, I don't see APR on Stargate. What am I missing? I wonder. Yeah, I think it's a couple. It's a fair amount of percent. But the problem is it's getting diluted really quickly. So I pulled out. I had a position, but I pulled out of my position. Oh, I'm not going to swap on VPN right now because I'm on the stream. But I had it got diluted very quickly. I mean, USDT got up to like 59 mil, so it's just not even worth it anymore for me. And I had like 400 grand in there. Um, do you get the stables back when you bond? No, bonding is a purchase of STG for stables. If you pool, yes, this is a single-sided position, so you get your stables back, but they've been diluted extremely fast. USDC is up to 60 mil, and USDT is up to 30 mil. So the very fast dilution, which means the yields have came down very, very fast. Hope that helps, guys. Friday, March 18th at 12:11 p.m. 56 people in the stream, 23 likes. We can do better. As always, I thank you all for joining me. Tell everybody to subscribe. After party on Discord for the most rational community in the entire crypto space. We are outperforming the market left and right. We make better decisions. We are protecting capital because we are the rational community of the crypto space. If anyone needs any personal assistance, obviously, noahseidman.com. All the links are on my Twitter profile. I wish you all a wonderful day, a wonderful weekend. Stay rational. Carve out the optionality. This is a market to be fearful of, but you need to hedge the fear with exposure to the market. I will catch you all on Monday. Be safe, be well. See you then. Peace.